Hey guys, welcome to another episode of CFB Talks Digital Assets. Hey Gabe, what do you think we should talk about this afternoon?
Well, I mean, there's definitely a pretty long list of topics that are, I think, top of mind for everyone that's in the digital asset space, starting with what's been the news of, the past
The
week or
latest,
so.
right?
It's just been so surprising. So it's been with the FTX, basically the FTX empire and Alameda Research demise just overnight. It really feels like it's just been like a flash in the pan, how fast everything kind of collapsed. So yeah,
And
we
it's
could start with there.
the impact has been pretty much like a small thermonuclear device for the industry. And unfortunately, the after effects look like they're going to linger for some time. Would you not agree?
Yeah, I mean, this is such a black eye for the industry. It really kind of it feels like a major setback because whenever you have such a established kind of institution that's was a significant market share of exchange volumes go under so quickly, it kind of yeah, it deteriorates that trust that I think crypto markets have we're starting to really build upon. So it's going to take some time, really, I think, for us to kind of work through this. I think overall, I think the industry is of course going to make it and continue to grow and develop and build interesting and innovating these projects and making these incredible things. But it's going to take some time, and so that's really where we're at right now. And there's just all sorts of new information that keeps
Mm.
being
Before we get into
released.
that, though,
And
let's have a
yeah,
very quick thumbnail recap of what's happened, right? So from myself, the main protagonist, Sam Bankman-Fried, the CEO of FTX, the erstwhile exchange. Additionally, a major pivotal figure uh, in relation to Alameda Research, an associated hedge fund stroke trading company stroke liquidity provider with strong links to FTX, right? Um, at some point, it becomes apparent that Alameda Research is potentially facing a liquidity crisis. They go out into the market, potential looking for bailout. We have one white knight that, in the form of Binance and the Binance CEO, saying that they may step in to bail out FTX, but then having looked at the books, doing a bit of due diligence, they pull back, and then of course all hell breaks loose, and the whole thing implodes. Pretty much, I think that's what happened, right?
yeah, and it was this liquidity crunch, and as details begin to emerge, we're starting to kind of figure out that there might have been some more, alleged malpractice that was happening behind the scenes. Whenever you are an exchange and you are taking customer funds on behalf of them and, facilitating transactions, it's essentially a custody type arrangement where that institution shouldn't be commingling any of those customer funds with any
Mm.
outside other entities or other parts of the business in itself.
Which is what which is what FTX was essentially doing with
Exactly. Yeah.
Alameda Research, right?
Yeah. I
Owned
mean,
by SBF.
SBF had an empire. He had
Yeah.
his market making kind of hedge fund Alameda Research on this side, and then he had his very large cryptocurrency exchange that was an offshore entity, not under any sophisticated regulatory framework on this side. And when you take these funds and start providing these liquidity shortfalls to cover Alameda Research's losses, and then you have customers knocking on the door the next day because of a leaked news article explaining the intricacies of this relationship and how they've really kind of been a lot closer and more entangled than we thought. You
Mm.
get this run on the exchange, and that's the liquidity crunch, which
That we're seeing
Binance
today. Yeah.
allegedly was going to step in. They were hedging themselves this entire time because I think they knew
Can you blame
that
them?
once they got to look at those books, that it's just too big of a hole to fill.
Yeah. I mean, I just want to throw in a few choice details that should actually Not that anyone is kind of ignorant about this, but obviously we do have some viewers who are from the institutional side of things, but not necessarily from the institutional crypto side of things, although hopefully they'll become more so over time. Some choice details. There's a spreadsheet going around which was reportedly published by the Financial Times. The spreadsheet that was prepared by FTX for investors when it initially ran into some difficulties. And it has some very unorthodox entries in this spreadsheet. Just a couple of things here. There's a couple of quotes here. So there are within the sheet, it says figures are rough values and could be slightly off. There is also obviously a chance of typos, etc. They also change a bit over time as trades happen. This is very, very unorthodox. It's not the
Yeah.
kind of thing you like to see in a sort of financial statement. I've got one other thing. This is really bizarre. There's also an entry, and I quote, this is what is apparently was in this financial spreadsheet published by FTX to its investors. We have hidden, poorly internally labeled fiat account. An account, a line in a sort of like a financial statement that reads that, a hidden, poorly internally labeled fiat account. I mean, that's sort of like we've gone into cloud cuckoo land at this point, right? And
Yeah.
these are the people that we gave our money to. So yeah, I think that should really, if you didn't have any sort of doubts about what you were actually dealing with before, look at those kind of things. And then I just want to talk about the latest very, very briefly. And I think as you mentioned, Gabe, there's a lot of sort of details. A lot of them are uncorroborated, so we can't go too far in terms of anything conclusive. But it is clear that Sam Bankman-Fried was a resident of the Bahamas, and I believe the FTX was essentially domiciled there as a financial entity offshore for the United States. The Bahamian police and financial authorities have reportedly opened investigations into FTX. The Bahamas, although we do think of it as an offshore sort of domicile regulatory regime, nothing is really that lax that you can actually take clients' funds, mix clients' funds with them, sort of trading proprietary funds and do weird things with them, right? And of course, the Bahamas got a strong relationship with the United States. So it's a case of watch this space, really, because this is probably going to get uglier, particularly for the senior figures within the groups that we've mentioned, and unfortunately for clients and customers of the groups as well.
Yeah, I mean, there's so many red flags. And when we look at how we approach um,
Yeah,
onboarding constituent exchanges to provide us pricing data for either reference rate or our indices, these are the types of things that these are the red flags that you're looking out for, essentially. If this entity over here has got this really close relationship with, a market making, hedge fund, and all these entities are offshore, or the majority of them, FTX US being the only one that was in the US regulatory framework. However, the entire group's going bankrupt, so that doesn't really matter too much. That's a huge red flag, though. That's the type of stuff
absolutely.
that you're just not going to probably find the quality data feeds on the pricing to
Yeah,
really develop and build out the inputs that you need to
yeah.
get quality reference rates and indices built on it. So
Yeah,
we've
we're
done a really
talking
good job
about
avoiding all
yeah,
that.
yeah,
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 and that's kudos to all the team at CFB and the regulatory guidelines that we follow to create
mm,
such a robust
yeah.
framework.
We can speak like that because we do have the authority as the only regulated crypto benchmark administrator in the world, as far as I'm aware. Certainly regulated in the UK under European Union BMR, the benchmark regulatory regime, right? So yeah, FTX never a constituent exchange and rejected several years ago, well before this happened for those reasons that Gabe mentioned. Now I want to sort of do a little, halfway through our customary price check of our regulated flagship indices, starting with the CME CF Bitcoin Real Time Index, the most liquid Bitcoin price that you can get in terms of a streaming price. It is trading currently at $16,853, and it's actually up for the day, 2.5%. And we also have, of course, the Ether counterpart, the CME CF Ether dollar reference rate, and also the CME, the Ether dollar real time index. The real time index is trading at 1,263, up about 2%. There are a number of other coins we can mention, Gabe, sort of related to this slightly, not slightly, very unfortunate set of circumstances. And I think you've got a list there.
Yeah, I mean, the the tokens that I've seen probably the largest impact in price have been related to the Solana ecosystem. So if you look at Solana, which is a settlement type token, and it's fully programmable, it's what we would call an Ethereum type killer, is what the industry likes to say. It's down, almost 55% or thereabout on the week. So
But it's up. It's
on
up
that
today. I
blockchain.
see. It's up about 15%. Sorry, I'm lying. It's up about 5% today. But yeah, nevertheless, it is up.
Yeah, I mean, it's probably a little bit of a bounce, a little bit of retracement, but
Mm.
it's my pricing's definitely as of yesterday's, I think when I took it, but we've got it, down significantly. So you could say, it's just down about, maybe 45% from last week, trailing a week ago. And one of the things that's happened, recently that's been transpiring is this Serum project, which is it's basically a decentralized exchange project that runs on the Solana blockchain. Apparently had an exploit, and that token has
Because we haven't
has
got enough
also
problems at the
had a
moment, so we
contagion
need more.
effect. Yeah, so it's definitely a spillover.
Sure, sure. Okay. There are other things going on in this market. Unfortunately, not all of them are particularly, elevating or pleasant. And another thing that's catching our eye is the Grayscale Bitcoin Trust. Why is that the case, Gabe?
Yeah, I mean, this is a pretty incredible kind of, you could say it's like a liquidity crunch type dynamic where you have the existing shareholders of GBTC trying to exit, out of the fund, and they're willing to accept, a discounted price on those shares when you compare it to the net asset value of the fund. So if you look at the
Mm,
fund and its assets, which could be, let's just say, I think it's around like 10 billion or so in Bitcoin.
mm,
And this thing has a market value of, let's just say, around like 6.5 billion. My numbers aren't exactly, these are approximations, but
sure.
this is where you kind of get that relationship of the actual shares are being traded out in the market at a much lower
Yeah,
value than if you were to just take out the books of the Bitcoin that's being held on the balance sheet of the fund of the grantor trust. You would find that it's at this significant discount.
sure.
So yeah, that's what's going on there, and I think it's obviously been a goal for GBTC to aspire to be a regular ETF.
How
And
close do you think they are of realizing that goal anytime soon, Gabe?
well, I think, with all the recent events, you have the SEC chair Gensler, who's, I think, definitely going to want to see more oversight, and there's going to need to be a lot more clear framework on crypto before you can get to a GBTC that's just this open ETF without having that grantor trust distinction that
Mm,
you see on other commodity ETFs like gold, like GLD or something like that. So
sure.
this is what kind of a setback for them as well.
Yeah, let's broaden things a little bit wider and also talk about something net positive. I think I believe you wanted to talk about the uh, open interest on the regulated Bitcoin futures trading on the CME.
Yeah, I mean, so if we were expecting to see kind of a mass exodus of kind of institutional interest in at least the crypto fund space or in Bitcoin futures, we just really haven't seen that transpire yet, which is I think a positive surprise for us. So just for example, if you look at the open interest on CME Bitcoin futures, those contracts are near or approaching 19,000 at the time that we're recording this. So
Yeah,
it's like a hockey stick, you know, jump up.
On the chart. Yeah, yeah,
Yeah, on the chart
yeah.
where we were seeing, let's just say for the past 3 months or so, CME Bitcoin futures would average around 15,000 or so, and to see that jump, it's pretty significant.
Sure.
Likened to
How
that,
would you interpret that? I mean, it looks kind of positive, but could it not necessarily be interpreted in a number of ways?
so yeah, you're right. The details of which, are these open interests, or are these contracts that are being, are they long? Are they short? Who are the players that are transacting in this market right now? Those details we have yet to see. I'm tracking it on a daily frequency, which is a little bit higher
Cool.
than the COT report, which is the commitment of traders, which is released
Yeah.
on a weekly basis.
By the CFD, so
Um,
yeah,
so
yeah,
we will get the update next week, and we'll get more details on who is long, who is short. But to me, it really just shows that if you look at CME Bitcoin futures, which is powered by the BRR index, um, our
a
most
regulated Bitcoin
trusted
reference
regulated
rate. Yeah,
Bitcoin index, we can tell that institutions and these investors, these speculators or institutional players are using this vehicle as a way to either hedge their bet or get exposure on the speculation side.
sure,
So it's definitely
sure.
become more popular.
Yeah, something positive from the institutional point of view, at least, right?
Yeah,
Um,
absolutely.
and I just wanted to round off, Gabe. It looks pretty quiet on the macro calendar, this all important macro calendar that we use to try to gauge some potential sort of economic influences on broad markets and, of course, on the crypto market. Have you got anything further to add to that?
Yeah, no, you're right. I think it's a relatively quiet landscape that we see in the next 7 days or so. What I'm probably going to be interested in is focusing on the initial claims data that we get every Thursday.
Right.
So, with the recent announcement that we've seen in the tech industry in particular, starting around these layoffs,
Oh, cool.
I would
Meta
anticipate that
and
we're going to start
Amazon
to
and
see,
others, right? Yeah,
yeah, we're going to start to see that kind of show up in the data. The reason why this is important for digital assets is because along with reducing overall pricing pressures and inflation to get to that Fed pivot, a big component of that is actually the tightness in the labor market. And
yeah,
I think central bankers across the world, including the Federal Reserve, are trying to see, some alleviation, some slack start to develop in this incredibly tight labor market. So once you start to see initial claims start to trend higher, continuing claims trend higher, these are the higher frequency data reads that you would like to see kind of indicate that eventual shift in gear for central banks, which should add to a tailwind.
so yeah, if we start to get those readings, it might be might mean some potentially good news from the Fed. Of course, it's not great news. Absolutely, when we have higher claims suggesting that we're having higher employment, but it is better news in the grander scheme of things with respect to inflation and, of course, the Fed rate hikes, which have been punishing asset values, right?
Yeah,
Okay, so
exactly.
yeah, we've run on for a little bit of time here, Gabe, and we've come to the end of our time this afternoon. It's been great speaking to you as usual, and great to have you guys along for our podcast. And we'll see you again next week.
We'll see you all. Take care.
Cheers, guys.